love the channel and find it useful in becoming a happy retiree. Subscribe today. Kevin joins us from Dunwoody. Kevin, good morning. Welcome to the show. What's going on? How can I help?
Yeah, I've got 200 shares of Boeing stock that I bought for 120, and it's obviously improved significantly in price. And Fidelity keeps telling me to sell some of it because it's over 10% of my portfolio. They say the price could go to even $400 to $500. Should I sell some now? Should I keep it? If it gets to that price point, do you think it'll drop dramatically, or?
Well, listen.
What's your advice?
Yeah, it's a tough one because it's been such an amazing stock. I mean, if you look back over the last year, it's up around 90% over the past 12 months, and the Dow, it's a member of the Dow, it's almost single-handedly carried the Dow, or it's one of the best performer. It's one of the very best performers. It's really helped the Dow. It's $344 today. So here's the rule of thumb. We've all heard this. You're not supposed to have more than 10% of any one stock in your portfolio.
Exactly.
You've heard that ad nauseum. I've seen what's interesting about that is that I've seen a lot of people build wealth significantly by totally ignoring that rule. I've seen folks that have had a little bit of stock that started to do well, and they just held it and held it and held it, and it's literally made them a fortune. And that is, I've seen that play out. It's one of the few ways I've seen people become really, really wealthy. If you think about a Home Depot or a Boeing over the years. In your case here, how old are you?
70.
70. And how much are you relying on this money for retirement? I mean, you've got 200 shares of this, 200 shares at you could have told me this, but times 344, you've got 70 grand worth of Boeing stock, and it's 15% of the portfolio. That means you've got about $450,000, right, in the account? Yeah,
right.
So, again, I'd say you're at your upper limit. I don't have a perfect crystal ball on a stock like Boeing because it's kind of, it's almost in no man's land. It's, trading at 25 times earnings, so it's a little highly valued, but it's also in a wonderful sector. Sure. I would say that to try to be on the side of prudence, I would probably say at 70, I'm relying on this money. I'd trim it back to 10. That's me. I'd trim it back to 10, but I wouldn't sell it completely. That's my answer to when you're overweighted in a particular company, and this happens to be a pretty good one. That's at least what I would do. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.